But we're now transitioning into more current utilization and power of data through CDFIs, through fair housing organizations. And when we were thinking about this panel, immediately in my mind, I knew the perfect person to moderate it. I'd like to introduce Sharon Legenza is the executive director, or are you the president or the omnipotent potentate? All of the above, of Housing Action Illinois. I proudly serve on their board. They are an organization that, while its name says Illinois, its influence is much larger than simply the state. Really advocates on so many different levels for home ownership, from policy and legislation to boots on the ground homeownership counseling, technical assistance. Every kind of organization, from large CDFIs to the smallest grassroots homeownership counseling organization. So I can't think of a better person to have a conversation with our esteemed guests. So everybody please warmly welcome Sharon Legenza.
Thanks, Horacio. I'm really happy to be here. And I guess to carry a different analogy, I think that we are the ghosts of Christmas present here. So we can leave everyone with some gifts of what is actually happening with HMDA. The fact that it is, we heard great history, but it's alive and well, and it's being utilized every day. So I also just want to say I want to thank Woodstock Institute for bringing us all together. They are a great partner, and Housing Action Illinois, we're always really just very proud to be able to work with them on a number of different issues. And in particular to co-lead the Illinois CRA Coalition, which is kind of one of our driving forces in terms of community reinvestment and ensuring access to credit in the state. So thank you. So I'm going to ask the panelists here to introduce themselves briefly and their organizations, and to maybe tell the audience a little bit about, like, how are you using HMDA today? Kind of how do you think about it in your work? So, Amy, please.
Thank you. Amy Nelson, Executive Director of the Fair Housing Center of Central Indiana, based in Indianapolis. And we're part of this panel is I'm going to be talking about some of the ways that we use this data. But we really started, the Fair Housing Center was started in 2011. I was brought in to start up that organization. And then within about 3 or 4 years, we realized that we really needed to get into lending. We were doing so much work in the rental space, but needed to get into mortgage lending. And right off, we realized that we had to start learning how, what this data was, how to use it to try to hold lenders accountable. And later today, I'll talk about some of those ways that we have used that.
Good morning, I'm Bethany Sanchez. I administer the Fair Lending Program at the Metropolitan Milwaukee Fair Housing Council, sort of on a smaller scale than Sharon's Illinois influence being nationwide. Despite our name, the Metropolitan Milwaukee Fair Housing Council, we work statewide in the state of Wisconsin. Almost 25 years ago, I was hired to direct what they at that point called something else, but anyway, it's morphed. I don't even remember now. Community Development Program, I think. It's morphed into the Fair Lending Program. It was definitely all about fair lending from the get-go. However, didn't really do much, quite frankly, so 25 years ago was 2001 for me. We didn't really do much with HMDA data. Really at the beginning for like the first 10 years or so, was focused on the foreclosure crisis and first figuring out what subprime loans were, helping the community. Subprime must be better, right? Getting the word out that they were not so great and that they were really about to blow up in people's faces, and then organizing a coalition to do education, do research, to change state law in the state of Wisconsin, and other things. But finally, that phase of our work thankfully became less necessary as the foreclosure crisis started to ease. And we started to focus more squarely on getting people into responsible home loans in the first place, and helping them understand what to look out for, certainly, and how to make sure that their experience as homeowners was sustainable for as long as they wanted it to be sustainable. And we work at the community level to do outreach and education. I'm part of a bunch of different coalitions that work with different sectors in different ways. Some of them overlap, some of them don't. And we've had some good successes. I'll just leave it at that for now.
Anthony?
Hello. Hi, I am Anthony Simpkins, and I am the president of Neighborhood Housing Services of Chicago. We just celebrated 50 years, as a matter of fact, and NHS was actually born, right, out of the movement and the advocacy of Gail Sanchez and that whole movement. Somebody mentioned earlier the Shame of Chicago. Amazing series, and episode 4 talks a lot about the work of Gail and that coalition. I had the luck and the honor, actually, to succeed Bruce Gottshaw, who was there on the ground. Gail was one of our founding board members, and Bruce is our founding president, and worked with Gail in that movement for a very long time. So that really is our DNA. My immediate predecessor as president, Kristen Faust, is here too. Hey, Kristen. But the thing and this really, I think, informs the work that we do at NHS now. The thing that really struck me, because, I was a kid when all of that stuff was going on, right? So I learned a lot, and I learned a lot. I still am a kid. I learned a lot. The thing that struck me was the multiracial character of that movement, and it just amazed me. And if we can replicate that again, we'll really be able to move mountains, especially some of the mountains that we need to move these days. And HMDA is very critical to everything we do, from something I'll talk about a little later, the lending equity ordinance here, the Illinois CRA, how we sort of measure our impact as an organization, CDFI certification, all kinds of stuff. So HMDA is really critical to the kind of community development and housing work that we do every day.
Yeah. So I wanted to follow up a little bit about how are we currently engaging grassroots organizations and everyday consumers in this work? Because we know historically it was a huge driving force in getting HMDA created. But that legacy isn't just in the past, it's happening even today. So can you tell us a little bit about how are you engaging other groups and everyday individuals in your work? Amy, would you like to start?
Sure, and everybody's busy, so it's hard, particularly that after hours kind of time, to be able to really. People are busy with their daily lives, dropping kids off, sports, all the different things. But one of the things that we have found is people are just hungry for the information. And one of the ways then, because we still have, in Indianapolis, so many neighborhoods that, particularly our neighborhoods of color, that do not have just a basic bank branch in them. With mergers, there's been closures, or that branch was just simply never present in that neighborhood. So one of the things that we have started doing is really publicizing the HMDA data in a way that's easier for individuals who might have a short amount of time to be able to pull the bigger issues out of it. And we started off doing that in some reports. The Woodstock Institute has been doing something similar here, where we just named high performers and low performers. And we broke that out by race, high performers when it comes to receipt of black applications, low performers when it came to receipt of black applications, originations, denials. And we started publicizing that and getting community conversations going around that particular subject. And then in more recent years, we've started to publicize a bit more some of our interactions with those low-performing lenders who have refused to work with us or to do things better. And again, getting that information out to the public as to, if a standalone ATM is being offered in your banking desert, here's why that's happening, and why here's the power that you have to try to answer back that this is simply not enough. We want a full-service bank branch, not just a standalone ATM with fees, being assessed on it. So we've just started publicizing a lot more things and doing it in more bit-sized pieces that really points to the issues that would be of interest in those neighborhoods and with individuals working in the lending sphere. And then we've been naming the lenders. We haven't been aggregating our data. We've been giving out charts and spreadsheets and information that individuals can look up their particular lender or a lender that they are interested in and see exactly what that lender has been doing over that past year or past few years.
I was just going to say, naming names always gets attention. And let me just ask a quick follow-up question. How do you publicize the reports that you're doing and getting them out to the community?
So massive, press, and then we go out and we do a speaking tour, going into neighborhoods and talking about that. This year, we also started publicizing our CRA exam letters. So if we know an underperforming lender has a CRA exam coming up, and more often than not, we have met with them, we've discussed these issues with them, haven't seen the response that we have wanted, we've started releasing that to the public as well, and putting that all over on our social media, putting that into our e-newsletter, and then going out and talking about that at neighborhood meetings, other types of meetings as well.
At the grassroots level, what we do is go out, and we is me. At this point, I'm back to being the only person in the Fair Lending Program. Go out to neighborhoods that we've worked with for a long time, quite frankly, through their connections to the CDCs that work in the neighborhoods. And talk to the residents. But typically before I even go out and do a presentation to the neighborhood residents, I've been coming to their meetings and just sitting in the audience and getting, asking my own questions and getting to know them, and helping them understand that, I'm not this formidable person that maybe I look like, I don't know. But so there's that. And then at some point, I asked to give a presentation and to use HMDA data to show what kind of loans are being made in their neighborhood and by whom, and what kinds of loan, who's denying a whole lot of loans in their neighborhood, or where is the fallout rate? When that's one of the things that we look at a lot. Both internally and also through our CRA coalition, is what's the fallout, who's at the top of the list in terms of fallout rates in Milwaukee. So we do presentations, help them understand what HMDA is and the power of HMDA. I bring examples with them. Some of my examples of the reports are not nearly as user-friendly as the ones where Amy interprets the HMDA data and makes it great. Amy's my hero. I need to talk to her more and learn more from her. But trying to show them what the reports mean, and how they can use them, how they can use their voices to talk to the bankers directly if they have concerns with the bank, or directly if they have, if the bank is doing some good things that they want to make sure continue. So we go and talk to the neighborhood folks and help them to be empowered to speak and to have an understanding of what's going on and to be able to articulate to the banks from their perspective, one, we want you to be in our neighborhood if you're not already, and two, these are the kinds of things that we really need in order to be financially viable and to help you grow.
Anthony?
So for NHS, obviously, community outreach, community engagement is really in our DNA. It's what we do. We have a whole team of folks that are in the neighborhoods every day at the local school council meetings and the block club meetings, and we're doing pop-ups, and so we hear from residents all the time. So a good example of this is that we heard a lot about residents, especially our seniors, not being able to get loans to do repairs to their homes. And we turned to the HMDA data, which showed that Black applicants were 2 times more likely to get turned down for a home improvement loan. We also connected that with some data that I think it was Fannie Mae had on undervaluations, which had a lot to do with the denials. So we were able to take that information from residents and see that there was an issue, and HMDA gave us the data to back up the fact that this is real. And so now we can talk to our banks and our regulators and say this is an issue that we need to address. We got resources for our CDFI to be able to do some home improvement lending to help fill that gap. So that data became very important, but the data was used to reflect the challenges that the residents themselves are saying that they're facing. So it was very important.
Yeah, and I think what strikes me a bit is that, as the first panel talked about, I think that HMDA has become something that seems very complex, very hard to understand, and you almost need to have gone to Harvard to be able to get the data set and to interpret it. But, and I know that your organizations play somewhat of a intermediary role in that. But I'm kind of curious, do you have ideas or examples of how we can really make that connection, energize that connection between community members, your organizations, and the data? And I'm not saying that we don't need intermediaries, but do you see a world where maybe the community themselves are saying, like, hey, we want to go onto Woodstock's portal and look up this bank, or your portal that was created and kind of look up this financial institution?
Yeah, and shout out to Woodstock for helping us and putting, our portal together. We use it all the time, but people are hungry for this information. They want to be informed about what is happening in their neighborhoods, why it is that they see friends and family members not being able to get loans or being denied for loans. And when you get out, if you get that information to them, people pick it up really fast when you key in on the core kind of issues. And then you have the portal for those who want to take more deeper dives into things. I had an event last year that was up in Fort Wayne, and we had not been doing much mortgage lending work up in Fort Wayne, Indiana yet. And what I did was I printed off 3 spreadsheets for the attendees. One was top 40 lenders in the Fort Wayne market for that most current HMDA year, and that had on their racial share of applications for blacks, whites, Hispanics, and Asians. And then I had that same spreadsheet for originations and that same spreadsheet for denials. And I handed out those spreadsheets. And then during that meeting, I just walked them through what exactly this meant. And I said, all right, in your particular community, the black origination rate is, I think it was, it's horrible. I think it was like 5.8%. Shout out to me lenders that are under 5.8% on your spreadsheet. And people were shouting out their lenders, and that raised the questions. Why is this bank did not do any originations in my community in the past year to blacks or African Americans? And all of a sudden, people started grasping exactly what this data was sharing, that we were sharing was telling them, and asking questions of the group that we were meeting with. Are any of these bank people on your board? And that's how that information can be used. And all it was 3 spreadsheets that I pulled very quickly out of our portal, printed off for 100 people that were in that room that night. And then I had 100 people shouting out lender names that were underperforming in the different categories. And that was, I felt, incredibly impactful, because those people walked away not only with that knowledge, but the ability to talk about that to others as well.
Bethany, would you like?
Sure. I have a different kind of story that actually didn't even start with the Fair Housing Council in Milwaukee, but we were part of it. Our colleagues in St. Louis filed a bank redlining complaint against a Wisconsin-based institution, and it was a complaint at HUD that was filed in 2013. By the time they settled in 2016, that institution had been talking to us and talking about how they could do a better job of serving the entire community, including people of color. And we had been giving them some advice, and they started to take the advice about, make sure that you are that your people, that your loan officers and the folks people interact with at the bank look like the people that they're trying to serve. Make sure that they're culturally competent, and that they connect, with communities of color. And guess what? They have been, and ever since then, every year they've been increasing, and for the last 4, maybe 5 years now, I should know that number, but I was going to look it up before I got here. They've been the #1 originator of home purchase loans to people of color in the city of Milwaukee. And so we're really glad for that, proud of the work that they've done, and hope that they continue to do good outreach and education, and have programs and lending products that serve the community, that meet the needs of the community.
Yeah, and it always strikes me that the data, it's not just for the community side, it makes business sense too, because it can show a financial institution where there are gaps, and they can, kind of proactively address it, because I think many financial institutions want to try to do that and serve the communities where they do business. So, Anthony, I don't know if you have
Slightly different example, and how this data was useful actually for legislators. So we actually worked with Woodstock, who also does all the number crunching for us. Thank you. To get the, so in summer of 2020, I believe, WBZ had the report where lenders are not lending, which indicated that banks just were not lending in Black and brown South and West neighborhoods, and that one bank in particular had lent more in, I think, Lincoln Park than all of the majority Black and Hispanic neighborhoods in the city. And there was a lot of response to that, and as part of that, we worked with Woodstock and some others and got the Chicago's Lending Equity Ordinance passed, which provides for more disclosure from institutions that are applying to be municipal depositories for the city of Chicago to disclose their lending and investment by race, gender, and location as part of their applying for this. And then there's a subject matter hearing that we have where we talk about this, and being able to take that data and make it visually understandable for the members of city council and members of, the mayor's administration, to see that was critical in getting this legislation passed, and then being able to then present that to them and wider sort of public audience at these subject matter hearings to do exactly what she was talking about. Let's, point out those that are doing well and those that are doing not so well, and are there particular areas or product types or, places where our lenders are falling short. And so that data became very powerful. So being able to educate residents, being able to take the challenges that residents are seeing and use the data to translate that, but also being able to give that data and information in a context to regulators, to legislators, is also super powerful. And we couldn't do that without, this Home Mortgage Disclosure Act data.
Mm-hmm. Yeah, I mean, I think that, we've, when we look at the uses of data, really, you've already mentioned it, but doing a deep dive, I think about it in a couple of different buckets of work, right? There's definitely an opportunity to do lending enforcement, right? And then there's the community outreach and education component, and then there's a policy advocacy component, right? And it's not like these are mutually exclusive, but as we think about the use of data currently, and as we think, the next going forward, kind of thinking through what are the enforcement avenues, what is the community engagement and education avenues, and then what are the policy, potential policy solutions. And just to follow up a little bit on what Anthony said, and I'll ask you to talk a little bit more about this, but what also came out of that 2020 WBZ article was the Illinois Community Reinvestment Act, this idea that the data showed such a disparity, kind of what could we do on a state level to try to make the access to credit more equitable. And I know, Anthony, I know that there was subject matter hearings and.
Yeah, a bunch of stuff. And again, kudos to Woodstock and all of the partners that really pushed that. And basically the impetus for that was that we couldn't get folks to understand the importance of this on the federal level, so we would do it on the state level, right? One of the things, I think we're supposed to talk a little bit about the CRA later in the panel, but as they were going through the CRA modernization, one of the things that NHS and a lot of other policy advocates were pushing was the fact that this data, this HMDA data, is available for everybody, and why is this not part of the assessment process, right? How does somebody get a satisfactory or an excellent assessment, and the HMDA data is showing that they don't lend to black people, or they don't lend to Hispanics, right? How is that even possible, right? But it is, in fact, right? Because the HMDA data is just not used, and the last iteration of CRA, they also refused to let that be part of the assessment. So you could have a bank that's rated as satisfactory, and they've got a bunch of discrimination lawsuits filed against them. So what we had advocates and we have administrations on the state level that recognize this, and it's the data that allows us to make this case, and so we can do it on the state level.
Yeah. And just want to shout out to former State Senator Jackie Collins here, who was a real champion of getting the law passed. So, but Anthony, you point out something that I think we all know up here, but something that we have to, I think, educate more people is that, you would think that the CRA exams would take into account that lending data, but yet sometimes what we hear is like, oh no, we have a whole separate fair lending enforcement avenue that you need to take. And I'm wondering, Amy, if you could maybe talk a little bit about some of the lending enforcement you do and kind of what do you think is working and kind of what are some of the challenges that you face?
And I will say very often those, at least from our experience, mortgage lenders that we've run into that are low performing when it comes to race or ethnicity, very often are also low performing when it comes to income as well. So then you do have that CRA angle with potentially a fair housing angle. So sometimes our organization has had to make the difficult decision to move forward and file enforcement actions against some lenders. And traditionally, this has been lenders that we've been meeting with for a series of years. And very often, walked away with we're going to do better. We just need time. And another year ticks by, and not a whole lot really has changed. But after that lawsuit or that enforcement action has been filed, now we've got everybody's attention. And it's unfortunate that is what sometimes that it takes. And then under that settlement agreement, we've been able to negotiate not only bank branch locations being put into our hardest hit Black neighborhoods, but also, origination requirements, creation of special purpose credit programs. And we have demanded, because I have felt that this, many of the items that are very often in national settlement agreements that you see are, getting a lender where they should be when it comes to their numbers and their data. But there's the gap in the fact that that lender was typically doing that for quite a long period of time. And that neighborhood needs to be compensated for that. So we have argued, and it's been hard fought, where those lenders have had to give out donations or grants to groups working on the ground in those neighborhoods that they were not doing business in. And that has been at times millions of dollars that we've been able to negotiate and get those donations and grants due to so many great groups that are working in neighborhoods, and we're just not given the opportunity. And then once that lender starts working with them, they realize just the amazing work that's being done that they were not connected, to before in doing that. So as a fair housing organization, not only are we going to use the data that's available, but we're also going to do fair housing testing. We're going to send in secret shoppers. The data tells one story, but what if somebody actually gets to the office? What happens to that individual and how they are treated? And very often, we might find evidence of differential treatment as well, that they were discouraged. They weren't given as many options. They were referred to a particular program. They weren't given information about the loan officer's favorite real estate agent, but the white couple was giving that information, and that tells a different story. And then when we have put our complaints together, or when we've met with lenders, or when we have published our CRA letters, we put in data, but we mix that also with mapping. Visuals tell a powerful story. The data, those zeros there, 0 loans to Blacks or African Americans in my community by this particular lender. And then you put the map up of the county, and you see all those loans that were made to white people and no red dots for people of color. That tells a powerful story as well. I can't say that it works all the time, but we have always met with every lender first, and then it's been what their response has been as to whether or not where this goes. We want to be a partner to you. We want you to get to, it's beneficial for everybody that you get to where you should have been. But far too often, it has been lenders telling us, we're good on our own. Thanks for the info, but we're good on our own. And then it's been us filing an enforcement action potentially a year, 2, 3, sometimes 4 or 5 years later.
Yeah, and just a quick follow-up. We know that there have been a lot of challenges under the Trump administration, defunding fair housing and fair lending, thinking about changing some of the rules around, like, for example, disparate impact. How do you think that that's going to impact the work that you're doing now?
The work was already challenging filing these cases against lenders. There's very few law firms because these can be very long cases that can drag on for quite a few years. So the challenges were already there. Disparate impact is still law of the land when it comes to the courts, despite the regulatory pullback that's been there. Every single circuit in this country has upheld disparate impact, and the Supreme Court has done so as well. But you've got to be You've got to, though, make sure that you are working with highly experienced attorneys in this field, because you don't want to make bad law right now. And so there is a little extra bit of caution right now. And because of that, we may have to look at, publicizing or drawing attention to issues in different ways. But certainly we have not ruled out continuing with litigation. It's just right now the regulatory agencies may not be the spot where those type of cases and actions go.
So Bethany, I want to follow up a little bit with you, because you're also a fair housing organization, or you work at a fair housing organization. And kind of in addition to the enforcement, we know that fair housing groups do a ton of education and outreach. And you've already talked a little bit about how you utilize HMDA data, but can you kind of go talk a little bit more about that in terms of community groups, but also kind of how do you engage maybe with banks utilizing the HMDA data with elected officials and other decision makers?
Sure, absolutely. So one thing is where I learned a lot is through my connection to the National Community Reinvestment Coalition, NCRC, which is where I originally met Ted. NCRC trained myself and some of our staff about what CRA, how CRA works, where the pressure points are, how you can engage with banks and help them to understand what their responsibilities are, and that we're watching and that we want to be partners with the banks. At some point, I began the CRA coalition in Milwaukee. So at the table for the CRA coalition, we have neighborhood-based groups, housing counseling agencies, homebuyer counseling agencies, because CRA covers small business as well, some of the minority business development groups in town, the realtors, the realtists, basically every kind of organization that cares about the kinds of things that are evaluated on CRA performance evaluations. So the CRA coalition every year looks at the lenders' rankings in a variety of different ways. We make an Excel table so that people can do it themselves and look at the factors that they're particularly interested in, and that's one of the ways that the fallout rate came to the top of our attention. Is several of them said in a meeting, "What's up with this fallout rate? What is it in the first place?" And then when they understood that it meant that it was the rate at which the institution's loan applications fell out of the home lending process. They weren't approved, but they weren't originated or denied either. They just fell out of the process. Now, in some cases, that might mean that they simply found another lender that gave them a better deal, or maybe they decided they didn't want the house after all, or maybe the lender was giving them a hard time. Maybe the lender was giving them, kept asking for new information because the old stuff had gone too stale for them. So we work with the CRA coalition, and then we call in and have meetings with individual lenders and ask them to tell us from their perspective how they're serving the community, and then we respond to that, and we also let them know from our perspectives where they're doing well and what we want them to continue to do, and where there's room for improvement, and what kind of loan products and procedures and staffing issues that we might see. We also have had we also do work through a coalition that we call Take Root Milwaukee. It was born out of the foreclosure crisis 15 years ago in 2010. It includes lenders, not just banks, but all home lenders who are interested in becoming a member, neighborhood group folks, the homeowner counseling agencies, philanthropy, the city government, our state HFA called WIDA, and realtors and realtists, real estate professionals. I think I might be missing a group, but you can see it's a multi-sector, kind of broad-based coalition. And we come together and work to support getting people into a responsible home loan, whether it's a home purchase loan, which is kind of our main focus, is to get renters into home ownership in the first place in a sustainable way, and then to help them to access home repair loans when they need it, or a refinance loan if it becomes necessary, or if it makes sense for their particular situation, and to connect them with resources, good, responsible resources that aren't going to turn out to be predatory. Because again, this was an organization that was started in the wake of the foreclosure crisis, where a lot of foreclosure rescue scams were taking place. And that's another thing that I was spending time on, was addressing foreclosure rescue scams back then. One of the successes about the Take Root Milwaukee, which is the name of our consortium, is that in the last couple of years, we've had a couple of banks come to us to apply for membership in Take Root Milwaukee, and honestly, one of them I'd never even heard of before, but they'd been told by their regulators that they need to come and join with us so that Take Root Milwaukee can come together with them, and they can learn from their other bank colleagues and from the different work groups that we have. Home buyer pipeline work group, home repair work group, and education and advocacy work group. And if you're a member of Take Root Milwaukee, you're welcome and encouraged to participate in any or all three of those events. And the lending folks seem to get a lot out of the cross-pollination. I'll never forget one of the events that we had several lenders telling what their products were, and bank folks were there, and community folks were there. And Dawn said, I'll just name her, probably most of you don't know who Dawn is, but Dawn said, "Oh, I'm so glad that you from this other bank told me about that. You know, we don't do it at our bank. I'm going to have to send my customers who can't get that kind of a product over to you." And so, you know, it was just really confirming that we were doing the right kind of thing. And then one other bit of good news about Take Root Milwaukee, and it's Take Root Milwaukee, but it's also the CRA Coalition. It's also the education and outreach. It's also a lot of collaboration and individual work and individual organizations working. But annually we have a HMDA webinar. We put on a HMDA webinar that shows the HMDA lending in the city of Milwaukee and in Milwaukee County in a variety of different ways. And I'll tell you that the lending trends for originated owner-occupied home loans went from loans to non-white borrowers went from 32% in 2019 to 47%, well, 44% in 2022, 45% in 2023, and 47% in 2024. That's the number. That's the percentage of home loans that were originated to people with owner-occupied properties. So we were pretty thrilled with that.
Yeah. So sometimes, despite the headwinds, progress is being made, right? And I would say one of the things, data is power, but so is collaboration, right? And that's something that we know very well in the Chicago region and statewide. We have a really great timekeeper here telling us that we're almost out of time. So because we are the Ghost of Christmas Present, right, to leave this audience, can you tell me, like, what is, like, if there's one takeaway or one kind of thing that you want our audience members to think about in terms of HMDA today, what would you tell them?
What would I tell them? Okay, in like a minute. So taking you back to the lending equity ordinance hearings that we have, we did a lending equity ordinance subject matter hearing, and one of the most powerful things we did was we were dealing with this issue of the very drastic racial disparities in applications, originations, and denials. And we had some people who had been applicants for mortgages to come and testify about their experience. This was very powerful because it made real all of this data. And I think probably the takeaway that I would invite people to take away from this is that this data represents real human beings. It represents real people who are trying to get their house fixed, who are trying to put down roots in a neighborhood, or trying to establish a legacy for their kids, you know, just pursuing the American dream and doing all of the things that they're supposed to do. So this data represents the reality for real people. So let's not forget that this data is people.
Amy?
I will just give a super quick, is we were meeting with a lender that we had been having a series of meetings with. They were a low-performing lender. In one of these meetings, the bank VP shows up, sits down. I'm talking about how they need to do better. We need to address modern-day forms of redlining. And he asked me, what is a redlining map? And I pointed to one that we happened to have up in our conference room that was right behind him. I pointed to him, and he said, is it still in use? This was 2 years ago. Don't be that lender. Make sure your people are trained on these issues. They understand them. This history is still present in our neighborhoods and needs to be talked about and discussed.
Bethany?
I would say that HMDA is powerful for so many different reasons. It helps the people at the grassroots level understand what's going on, and it helps advocates like us understand where we need to shed some light and make some changes, and it helps the lenders to understand that same thing, where they can do better in terms of serving the communities that they purport to serve. And we really need it to do all of those things, and we need all of you and as many of you, the people that you can corral, to make big noise, make good trouble when there's some more direct attacks on HMDA. I mean, right now I'm concerned about, you know, who's going to collect and put out the HMDA data for 2025.
So, well, Nana, we'll leave that to the upcoming panel to talk about the future. But please join me in thanking our panelists today. And I now turn it back over to Horacio.
Thank you, Sharon. Thank you. Thank you so much. In a data is power example, actually, I think the bank is here, but I won't call them out even though it's a good story. When Anthony and I were presenting last year to the Chicago City Council on the performance of the financial institutions that wanted to do business with the city of Chicago, I always shared the data in advance. I don't want any of these financial institutions to be caught off guard by what we're presenting. We presented and compared them to each other, and there was a bottom performer. Before I got back to the office, I had a call from that financial institution, and I'm like, uh-oh, I'm in trouble. And we set up a meeting for, I think, that next morning, first thing, and they wanted to show me how much better their data was going to be the next year. They already had, that's the weapon of disclosure. That's the power. It is sometimes necessary to be able to disclose for people to be given the opportunity to modify their behavior. I've parented, I've learned those phrases. It's another word for doing kind of what Amy does, which is kick people in the ass sometimes when they don't do what they're supposed to be doing. So I think it's so important for us to be able to know where we came from and know how hard we had to fight to have this data and to be able to use it through disclosure. But through these organizations, that's where rubber hits the road. That's what it means for us to be able to democratize the data and then translate that into action, which is how I started off by talking about self-governance. Because at the end of the day, what you're talking about, you don't see any regulators up here. You don't see the agencies up here. Nobody's going to save us but us. Give us his data, we'll take care of the rest. And that's what they represent right now. So thank you very much.